South Africa's monetary policy management has been roundly lauded around the world since the dawn of democracy in South Africa. In our studios today, we have Governor Lesetja Kganyago, the 10th governor of that revered institution. Governor, I'll get my one-year anniversary congratulations right in early. And welcome to our studio, and thanking you for your time. And begin by asking perhaps your reflections on the year that has been.
Well, monetary policy does not just work on a one-year horizon. We work on an 18 to 24 months horizon. So if you take the horizon as a 12 months horizon, we might arrive at a wrong conclusion. But let's take it that that period includes the 6 months before my reappointment, since in any case my reappointment took place way ahead of the expiry of my second term.
All right.
So
okay.
so that helps. That helps. But I would say to you that reflecting on the period, it was a tumultuous period. We had the imposition of tariffs by the United States that created a lot of uncertainty in the global economy and in the global financial markets. It also led to a breakdown of some important relationships. The models would have said that a country that imposes tariffs will end up with a currency that appreciates. That is what we saw with the US dollar. It appreciated after the first announcement of the tariffs, but since then it has depreciated, and year to date, the dollar index, which includes 10 other G10 countries, had actually depreciated. And the US dollar had also depreciated against lots of other emerging market currencies. So that was the year. It was a year full of uncertainty and particularly challenging.
And when you look back, Governor, and I'm sure as you do with your colleagues, and you look through the year and you look at what you did, do you sometimes get the sense that perhaps you could have done this way and then gone perhaps the other way with this particular decision? And I'm looking back on the monetary policy year that was.
No, these things, that's why you emphasize uncertainty. So what we would do is that we will have a central position, and then we will have the alternate positions. And what we have been doing over the past 2 years, which is something we learned during COVID, was to start putting scenarios, because the uncertainty is so much. So in January, for example, we presented one of the scenarios, and one of the scenarios was that AGOA will be ended, and after the ending of AGOA, the US will impose 25% tariffs on South Africa. We modeled we modeled that scenario. Well, we were correct in the sense that AGOA was not there, but we said 25% and we ended up with 30%.
You were 5 percentage points out.
Yes,
it's not too bad.
Yes, but the expected impact was that it would have an impact of about 0.3% on economic growth. We also expected inflation to tick up a little, but both scenarios didn't play out that much. Growth, yes, did get impacted, but inflation, the situation turned out to be the opposite. And the reason it became the opposite was because instead of the dollar appreciating, the dollar depreciated. So we played out with that scenario. Hindsight is always perfect, but that is why it is also always important for central banks to regularly evaluate their frameworks and regularly evaluate their performance. And we had, the National Treasury rather, launched a review in 2020 of macroeconomic policy in South Africa, and one of the areas was a review of monetary policy. And one of the papers that came out of that review said that South Africa's inflation target was too wide and too high, and that it must be reviewed, it must be revised lower. And that is the work that we had been doing during that period. And so in the past 12 months, we stepped up that game, which culminated in a conference on 25 years of inflation targeting in South Africa. And eventually an announcement by the Reserve Bank of a preference for inflation to be closer to 3% rather than 4.5%.
Yeah.
And to be clear, 3% is the lower end of the inflation target range. So the inflation target range has not changed.
Yes.
Still 3 to 6. The Reserve Bank just prefers to keep it at the lower end of that inflation target range. So that was what we faced with, and it looks like so far the acceptance from the market of the preference of the SARB has been a positive one. And after that announcement, you know that the Ministry of Finance issued a separate statement, but after subsequent adjustments, the engagements, the minister and I issued a joint statement that spelled out.
I remember, absolutely.
Yeah, Governor, can I take you back to the comments that you made around tariffs, just defying traditional economic models in terms of the impact that has been seen? And you remind me of the opening remarks of the IMF Managing Director Kristalina Georgieva at the IMF annual meetings, and she did reflect the fact that the tariff impact had been better than feared, I think were the words that she used. And so I just wonder whether you think, perhaps with confidence, that we're out the woods in terms of the tariff impact.
No, we're not. The MD was talking about the global economy, and that's because different economies got affected differently. If you are Canadian, the impact of the tariff is massive. It leads to almost a contraction in the into a massive slowdown in the Canadian economy. If you are a South African, our growth impact is around 0.3%. But again, that's the law of big numbers. You look at it and say South Africa's growth has been around 0.3%. But if you are a citrus farmer in South Africa, if you are an automobile manufacturer in South Africa, it becomes a different ball game. And if you are a worker on a citrus farms in the Cape, or a worker in Gqeberha in the automotive industry, you are talking of a different ball game. So the managing director, remember, is the International Monetary Fund, so she looks at the overall economy. And I'm not even sure, I'm not sure that she said it was better than expected. She said it was less bad than we had expected.
Yes, sir. Of course. I mean, you were right there. And perhaps we can actually go to the meetings and just get into a conversation around your key takeaways at a high level of the most recent World Bank IMF meetings.
For me, we always disagree. There was one thing that we all agreed about, and it was that the uncertainty is not good for us, but the uncertainty is going to be with us for a long time. There was another aspect which I took away, which said that for the good of the global economy, we have got to be acting collectively through the international institutions that we had established. But we are not fully in agreement, because others would say that things must change and all of that. And that the managing director almost global policy agenda, which spelled out how countries should actually react to the current economic environment, was summarized in basically 3 areas. One was that monetary policy should continue to focus on price stability, and that central banks have got to act independently in pursuing that price stability mandate. Secondly, that the countries that have got the fiscal space should provide some stimulus within a disciplined fiscal framework. And for the others that do not have fiscal space, and this would include South Africa, that you must continue or commence a path of fiscal consolidation in a manner that does not undermine growth, but fiscal consolidation you must do. And thirdly, that you must actually continue to implement, if you have started, or if you have not started, you must now institute structural reforms to lift the potential growth rate of the economies of the respective countries. And those were my takeaways. And if you want interested in how I think South Africa fares in those three areas, it is something that we can always talk about.
Absolutely, and we'll come back and talk about that, Governor. I wanted actually to bring in another element and take the thoughts that you have brought us from the IMF, which paint a fractured picture of the globe. Which fractured picture we now take into the 2-3 weeks or so that we have before the G20 summits and the B20 summits. And I wanted your thoughts on what do you think should be the key things that South Africa focuses on, one, from a finance perspective, as well as, of course, from a national perspective, given this fractured background that you have just painted.
When South Africa focus in the context of the G20.
Yes.
Yes. So we decided, as we assumed the presidency of the G20, that we are going to focus on. We are not going to add things to the finance agenda. The finance agenda is already very big, and we will take one issue from the agenda and up the game, elevate it. And we decided to pick the issue of cross-border payments. We picked up the issue of cross-border payments because this being the first African presidency of the G20, we needed to get something that really affects us as Africans. Why did we pick up payments? Firstly, we have got the Africa Continental Free Trade Agreement. We can trade with each other. At some point, the trade must be settled. Do we have the payment systems that are interoperable that would be able to settle those trades?
Yeah.
And importantly, is the continent able to settle trade with other countries, and what are the costs? What are the costs thereof? I elevated this firstly because I was wearing another hat. I am the co-chair with the governor of Italy, Governor Panetta. We co-chair the cross-border payments committee of the Financial Stability Board, which will present a report to the summit on the progress made on cross-border payments. The second aspect of why cross-border payments were that important is that Africa is a big recipient of remittances from the African diaspora. And the costs were prohibitive for those remittances coming into the continent. But for us in South Africa, we are also home to a large African, for lack of a better term, I will just still use the diaspora because Africans are Africans.
Sure.
But one of the most expensive corridors to remit money was between Johannesburg and Harare.
True.
And so we, as part of this process, we ended up having to engage also with the Zimbabwean Central Bank, Reserve Bank of Zimbabwe, but took it broader into SADC and said, how can we make this cheaper? And the point that we came to the conclusion of is that we have got to interlink our fast payments systems, and that then entails that every country has got to upgrade its domestic rail so that money can be transmitted more efficiently across the borders. So that was what we emphasized, and that is a central bank track. And then I will not go into details with the other one, which is a finance ministry's track, which had to deal with the cost of capital and the challenges of debt of the African continent. And you would have seen there had been a declaration that had been issued in Washington by the ministers of finance in this respect.
And there's still a lot of work to be done on that front as well. I wanted to take you very quickly to one of the points you made around the payment system across the continent. There's, of course, the Pan-African payment system. I wanted your quick thoughts on whether you think that could potentially be a game changer and answer to this key impediment to increasing intra-African trade.
We have had interactions as African central bankers. When the system was presented to us, we engaged with it. We are the custodians of the payment systems as central banks.
Yes.
And we said, this model does not fit with what we are doing. We proposed an alternative of how that model could work. We called it a commercial banking model, which basically meant that PAPs would engage with the commercial banks, and the commercial banks are finding it accessible and cost effective for them to hook into the PAPs. That is what they would do. What we couldn't have was to have a structure continent-wide while we have got our own real-time gross settlement systems. And the option we opted for as central banks was that we must get the interoperability and connectivity of our real-time gross settlement systems. And we're doing it. We started with the Southern Africa to East Africa corridor, and we're doing the Southern Africa to West Africa corridor, and East and West would also do that. And we have to set up interoperability standards, but in Southern Africa we are able to move fast because in addition to the national real-time gross settlement systems, we now have a SADC real-time gross settlement system. And so that means that we already have the infrastructure, we have got the rails to take us there. And the SADC RTGS has already cleared in excess of 20 trillion rand. It is it is the biggest one in the entire African continent in terms of and we have onboarded in excess of 110 banks in SADC, and we have got all the SADC member countries except one that is in the process of being onboarded. And that is the route that we said we must take. But this deals with wholesale transactions. What about you and I who would like to send $100 across the border? That's where the fast payment system actually comes in. And the idea here is to cut the cost to less than $1.
Sure. I'm waiting for that time, Governor. I've been paying 20% to send money home.
Over time, I actually must congratulate the work of yourselves and the country in terms of the payments ecosystem. I traveled to Angola recently, and I was essentially in a very difficult space. I was essentially broke because I couldn't tap and pay because tap and pay infrastructure is not developed in Angola on my phone or even using the card, and even the pay shop innovation that South Africa has, where you send, I can send money to you and you'll get it right now. It's not available there. So congratulations for the advancements on payments, sir. But of course, in this day and time, when we do talk about payments, we talk about traditional forms of payments and traditional currencies, but we also talk about digital currencies nowadays. We're talking about stable coins. In fact, this week, Japan implementing a yen-backed stable coin. Of course, we do know that the US market is the biggest in that regard. Talk to us about what we can expect in this ecosystem, specifically with the shareholding that the South African Reserve Bank now has in BankServe, sir.
Pay Inc. it is now called.
Yes, Pay Inc.
Thanks for that. Pay Inc. is now called. So we are doing the modernization of the entire payment ecosystem. And what we have realized that you talked about the traditional. So the traditional system had been that you have the banks, and the banks were driving this, and everybody else who was involved in payments must go through the banks. What we are doing in this payment ecosystem modernization is that we are now setting the ground rules for the different players who would like to come in there. You do not have to be a bank. You could apply for a license to just do remittances, to just do transactions and so forth. And so without having to have a banking license or having to have a banking partner. So we are writing those ground rules, and players could come in. And the first of the mark had been the small fintech players. And interestingly. But we also found that the big retailers have got massive infrastructure that could actually help to transmit the money very quickly, although lots of them still had a high cost infrastructure. So they have the speed, but the cost was a bit on the high side. And hence, us now stepping in to create a national payments utility, so that we create a payments utility. This is a public good, and all the other players could tap into to offer the services, knowing that there is a backbone that is run by the central bank and the banks that are co-shareholders in that scheme. So that is the route that we take. We now have an annual payments conference, and I actually just got impressed by the innovation that has taken place. Many spaza shops now are no longer reliant on cash. They have got very cheap gadgets. Some of them will almost use their cell phones, where you could actually, with a platform on the cell phone, you can transact. And the beauty is that the spaza shops no longer have to worry about having to take the money to the bank, or worry about how secure am I with all this cash that I have here, that it is actually all done digitally and it's in the... So there is very exciting stuff that is forthcoming on the payment ecosystem modernization in South Africa. It started as just a modernization of our RTGS system, and then we picked up that there is a lot more that could actually be done in the space.
Quick follow-up, Governor, would be your thoughts on the stable coins environment.
Yes. So again, there are two things here, because yes, Fifi made this point. It's that there are the crypto assets, and I'm deliberately using the term crypto assets because some people think they are currencies. They are not currencies, and the technology that underpins them. That technology can be used in so many other areas, and it had found itself also into the creation of stable coins. I have a problem with the name stable coin, because I'm not sure that they are quite as stable as they are made out to be, because I actually think they can break the back, and if they break the back, we have got a problem. And so the biggest now is the US, which has creating a stable coin backed by US treasuries.
Yes.
And at the moment, US treasuries are seen as safe assets, but there are starting to be questions about how safe is the safe asset, and that raises questions. So what we did was to put a framework to allow the stable coins and to allow crypto assets to come in. And the first step was to declare them as financial assets, so that they fall into the regulatory space, so that it gives users some form of protection. But there are also worrying trends on the African continent. The creation of stable coins, especially the dollar stable coins, are being used to undermine African currencies, and people are using those to short the currencies. And we see the rise in the use of stable coins on the African continent in countries that are experiencing a shortage of foreign exchange. So people are almost like creating their own foreign exchange in that route. And I worry that some of the countries might actually lose monetary sovereignty, because if people migrate in that space, and we have a problem. But the way to deal with it is not to try and prohibit it. The way to do it is to do the adequate reforms, so that people have confidence in their domestic currency.
Yeah, the problem we have, Governor, is that time is not on our side. 1 million other things that we need to ask you very quickly about. We're in an environment where gold has been on an upward trajectory. I'm reminded of the conversations that took place around the rand. I think back in the early 2000s, people were saying the rand is a one-way bet. It's only going in one direction. It appears to many people gold is heading in a similar direction. And we've seen one of the key underpins coming from central bank buying of gold. From the SARB perspective, what's the strategy on gold? Are you in the camp that's buying? Let me be direct, sorry.
Okay. A lot of central banks are buying gold, and they are talking about like increasing their holdings to like 5% of their forex portfolios.
Yes.
And I've had the same question in South Africa. Why don't you buy gold? But 23% of our reserves are gold in South Africa.
Already?
Yeah. 23% of our gold, our reserves in South Africa are gold. And actually, if you look at the rise in our reserves, the rise in our reserves is a function of the price of gold. Of gold. So in a way, you could say South Africa holding big chunks of gold stocks much earlier had actually benefited us. In some of the instances, I would say we probably got the gold whilst it was below $400 an ounce, and now we are like
at 4,000.
At 4,000. So if we were to go and buy more gold, somebody will ask, I mean, you bought it at 400. Why do you want to buy it at 4,000?
Are you selling?
But, no. We are not selling reserves. Let's be clear on this one. The point, though, is that the rush into gold is reflective of two very important points.
Yes.
The first one has to do with question marks about how safe is what was called the safe asset still is, given rising debt levels in the advanced economies. People are looking for what they call alternative safe assets, and unfortunately they cannot find the alternative safe assets in the other countries, and the one thing they had found to be safe is gold. And the language is as follows: that gold, I own it. If the price of gold goes down, so what? I still own the gold. It's here. It's my asset. It's like I have a house, and you tell me the price of houses have gone down. I still have the house. So what? It's the only thing comes when I would want to sell it. The second reason that I think had driven people to go beyond the issue of the safe assets had to do with the weaponization of finance.
Yes.
When we get told that it is a privilege to use this currency or that currency, so if it is a privilege, I would rather go somewhere where I have rights rather than privileges.
Yeah.
By coincidence or by design, I'm not too sure, but we do have the privilege of having this conversation with you following, of course, a very key interest rate decision over in the US and ahead of another key interest rate decision in Europe later this afternoon, sir. You've told us repeatedly that the South African Reserve Bank doesn't follow the Fed, but you do watch what the Fed does. You probably would be aware of expectations from local market participants, just given the fact that the Fed has given a little bit more relief in its interest rate system, that perhaps we have room to do the same, as it were. Your key takeaways, if any, from watching the Fed last night, sir?
The Fed is Jay Powell and his colleagues are doing a very good job, and the Fed, if you use the full name, is the Federal Reserve of the United States of America, and I've got no doubt that they are taking decisions in the best interest of the American economy. Those decisions get taken. The U.S. economy is the largest economy in the world. It tells us what they think, where they think the U.S. economy is going. My take from the announcement yesterday is that it spelled out a lot of uncertainties, and during the questions and answers, when the chair said that a cut in December is not a foregone conclusion, and re-emphasized that again and again, told me that they are also grappling with uncertainty, just like we do. We're going into our own policy meeting. We will have a discussion about the global economy and what this actually means for the South African economy. And we will look at the outlook for the South African economy, and we will take decisions that are appropriate for where we are going as the South African economy.
Governor, my intro, I said the South African Reserve Bank has got a well-earned reputation amongst global financial markets as well as here in South Africa. We've just spoken about the Fed. The Fed is also regarded highly in terms of managing monetary policy. And we've had this discussion before about the dual mandate. And for some people, it makes sense to ask a reputable and also a very well-managed institution like the South African Reserve Bank to explicitly say growth is part and parcel of the mandate. Is that debate important for you, or is that missing the point still?
The debate is important. I would like to believe that the South African army is well regarded. We wouldn't ask the South African army to start dealing with inflation because yes, of course they can shoot. They can miss the target.
But they don't have the tools.
They do not have the tools to achieve the target. So this is an ongoing debate, but it's a very interesting one because you know that the ECB does not have a dual mandate. It has got price stability. Neither does the Bank of England. Neither does the Bank of Canada. And so these discussions come, and I can understand the expectations of people. Seeing an institution that we gave them this task, they have executed the task,
Can we give them some more?
Can we give them some more? I could see that. But let's think about this. Let's suppose that the SARB has to be given an employment mandate. We have got no say on the education outcomes because you've got to be producing people who are fit for the economy. We do not control the price of labor. We do not set the labor market policies that the country follows on. We do not have those labor market instruments. They lie somewhere. They lie with the Minister of Labor. The ones on education lie with the Minister of Education. So why do you want to ask these technocrats at the central bank who do not have those tools to say their job is to create either employment or to create growth? But let's look back and says that our constitution says our mandate is price stability.
Yes.
And the authors of the constitution understood this, and the reading of the constitution is very important because it says you must protect the value of the currency in the interest of balance and sustainable growth. It didn't say and, it said in the interest of, because the authors understood you cannot have balance and sustainable growth in an environment of price instability. And so our contribution to growth and to employment creation is by promoting price stability. And why is price stability important? Just from that work in the G20 with the Africa work on the lowering the cost of capital. The point of departure in the cost of capital domestically is your inflation rate. There is no one who will lend you money or invest money at a rate that is below the inflation rate. And if your inflation rate is high, you increase the hurdle rate. And so we would prefer to have a low and stable inflation because that brings down the cost of capital in the economy. And with a lower cost of capital, you are lowering the hurdle rates and you are making it attractive for investments to take place. So that discussion goes, but I find the discussion to be polarized and failing to comprehend the importance of different institutions in society. And I was talking, the Swiss National Bank just also has a mandate of price stability. Lots of people who go to Switzerland will like to buy a Swiss Army knife. And that army is clearly well respected internationally, that people would like to have Swiss Army knives. But the Swiss Army is focused on what the Swiss Army does. It is not being used to contain inflation or to contain unemployment and all of those things. So society must design institutions to achieve particular issues. Sometimes people call for the central bank to do more because the central bank itself meddles in areas that has got nothing to do with it, and thus attract that unnecessary attention.
Absolutely. Governor, if I were to go to Switzerland, I'd like to buy a Swiss watch, not an army knife. Thank you very much. Governor, it's been a pleasure hosting you, and thank you for your time today.